All right, good morning, everyone. Welcome to Breakfast Club. John Hutchinson and Jeff Wood along with you here this Wednesday, October the 15th. It is 8:30 a.m. Futures are up. Looks like a pretty strong open coming up. Jeff will walk you through a number of charts here in just a moment. In advance of next week's Millionaires Trading Club live event, wanted to share briefly here a chart that I've been building. This is for the full year to date. And I'm doing some additional data analysis which I'll be sharing next week during the live event about the efficiency of our trading in Millionaires Trading Club. But so far, I'm excited about the results from the perspective of we made obviously the major change to right here, right in July. Draw that line down. Before July, we were just running events, right? We ran an event at the end of January, one in here, one here, the multi-day virtual event in May. And then in July, we switched over to essentially daily trading, practically. And a couple of things that are of note here. This is based on Dave's trades. So a max capital here of about $48,000, might be 48.5. Our average capital right now is running at around 24, I believe it is, $24,000, given all of the positions. This is open and closed positions. So this net total here is inclusive of the 11 positions we still have working. And you can see as capital rises, as capital falls, right, the income is trending one way or the other. We took one loss here, we took another loss here, but we're pretty much closing in on recovering from all of that in just over 30, 45 days. They sucked. Those losses sucked. But what I'm really excited about here is what this is showing. You don't need to have six figures in the market to be successful generating income. This is with limited capital in just these 3 months. Overall in this period, 9,000 of the $15,000. We were somewhere around 6,000 here at the beginning of July, so we've picked up almost $10,000 in income. I mean, that's 3,000 a month, and yet we're only operating at about an average of $25,000 to $30,000 at any given time. So this is coming your way if you're attending Millionaires Trading Club, the live event next week. I'll have so many more details to share with you. Looking at how efficiently our trading is, our scaling is, the overall operation of essentially the program, and much more. So pretty excited about being able to share that with you. We have, I don't know, Jeff, do you have your charts? Are you ready to go?
Yeah, I'm ready to go.
All right,
Good morning,
let me turn
everybody.
it over to you.
All right, let's do this. Of course, it's always fun figuring out where Zoom puts Thinkorswim. All right, let's see, should see my screen. There we go. Okay, so as John mentioned, futures are up. You can see over, I will collapse this just to give us a little bit more room in a second, but ES for S&P 500 futures up over 0.5%, NASDAQ up over nearly 1%, and the Dow up over 0.5%. So it is quite the interesting week. We've had quite the whipsaw week. And unfortunately, as much as we always say, ignore the news and trade off charts and whatever, this has been a little bit of a news-driven week with tariffs back in discussion starting on Friday, with with Trump going against China. So that continues on Sunday. So that was Friday. This is the SPX daily chart. So Friday, really big down day. Then Sunday, Trump comes out and says, hey, don't worry about it. This is all fine. Everyone thinks the taco trade is back in play, and whatever. And so we have a relief rally on Monday where this is the open of the candle. So we gapped up higher. We almost closed at the high of the candle. So everything is good. And then yesterday, China says, hey, if this is what you're going to do, we're going to limit the shipping companies that will work with the US, which would obviously increase prices, that would increase shipping time, all the rest. So we gapped. This is the open of the candle down here. This is the close of the previous candle. So we gapped lower, started off the day going lower even. I mean, this is a red candle for most of the day. We finished higher after some other news. And again, like there was all this good news about peace talks and everything else. So it's been sort of a crazy news week. But if you look at this, we had went up as high as 66.82 at one point yesterday and then finished much lower. So you have a lot of wick at the top, you have a lot of wick at the bottom, a little bit of indecision. So what we're sort of looking for, and it was kind of funny, we were prepping for the MTC service trades yesterday, and Dave asked me, what do you want to trade? And I had my list, and I was like, well, this one, this one, this one. And he's like, no, these are all AI stocks that we have to trade next week in Vegas. And I said, well, what? The only things that are moving right now are metals and AI stocks. So it's just kind of funny. But that's kind of where the market is now. We do have earnings, and earnings, is supposed to help, kind of push the market higher. And oops, come on, JPMorgan. So we have the big banks start us off, and here is how the market reacted to JPMorgan. So JPMorgan actually blew out expectations, blew out revenue, earnings per share, all the rest. And yet, after it was announced, JPMorgan at one point was trading all the way down to 293. It had opened, it had opened up at 305, and at one point was trading all the way down to 294. It did recover some of that loss by the end of the day, but you wouldn't expect that from these major banks. And actually, Citigroup and Goldman Sachs and whatever all sort of had that same fate. Oops, let me go to Goldman Sachs. Maybe not quite as bad, but certainly you see again this high wick and low wick on Goldman Sachs. And so, question is why? What is going on? And is there anything that we can learn about this, sort of going forward? So, one of the reasons for positivity. Well, I'm sorry. What? Yeah.
What you say to that, to answer that question, is yes, and we're going to tell everybody during the Millionaires Trading Club live event next week. So if you don't have a ticket, you won't get an answer.
That's true. That is all true. I will give you the abbreviated version of that, so I won't give anything away. But if you look at it, JPMorgan, like I said, they beat out on expectations. But if you go through all of the earnings messaging and read through all of that, what they were talking about was actually deposits and account growth as being a factor of future performance. And what that means is they're worried about the current economy with spending, with more people spending from their savings account. So we have less savings, we have less deposits, we have less personal account growth. Now, JPMorgan and all these other ones, they're, they have a lot of retail accounts, but they're really, it's really a big bank. And they're really talking about corporations as well. So they're also expecting corporations to have less account growth, less deposits, and whatever else due to economic headwinds. They didn't specifically say due to tariffs or anything else, but they are expecting higher expense growth, which is weird. It's just higher expenses. Why are they expecting higher expenses? Because they are expecting to write off more loans, meaning they are expecting people in the next quarter, next 6 months, next year to not be able to pay off their loans. So you take a deeper dive into that and you're like, well, why can't people pay off their loans? Well, then you have Powell coming out and saying the labor market does continue to get worse. So this isn't all doom and gloom. This is just kind of presenting a little bit about what's going on. We also have auto loans coming out with the average price of an auto loan hitting a brand new all-time high at over $50,000. So there's a lot of concern about where the market is going, and think, well, I thought we are bringing in all this money on tariffs and whatever else. Where is that going? And so that's sort of what we'll talk about more at the MTC event is kind of the future. But right now, there are still plenty of pockets in the market that are doing well. And it's funny, because we can, ever since John had this AI2 summit, people continue to write in saying, is AI in a bubble? And yet, if you look at earning, we'll see, we'll as earnings continue. But if you look at earnings, the earnings right now are happening in the AI stocks. Earnings are happening right now in stocks partnering with AI companies. So you just see that with Walmart yesterday. Walmart had a big partnership with OpenAI, and Walmart had a 251% normal ATR move yesterday. AVGO, Broadcom, they had their little partnership with OpenAI. So after a down day, they gapped higher on that one. So, and we often talk about like the resilient consumer. And what I wanted to show too is if you look at Target, that's not exactly showing you that the consumer is being too resilient right now. If you look at Amazon, obviously heavily impacted from the tariff announcements, kind of rose back up after the tariffs were not as bad as everyone feared, but like still Amazon is kind of struggling a little bit. Um, Certainly over the last couple of months, they've not enjoyed the same thing as everyone else. But if you look at TPR, Tapestry, they they make high-end handbags and accessories like Coach, Kate Spade, and others. That continues to move higher. And yes, they were subject to the same Friday nonsense. But even yesterday, while the rest of the market was sort of in a little indecision, they do have some wicks there. But so it's the higher end affluent consumers that are really sort of driving the market, and that's what we need to keep paying attention to. The rest of there's other pockets in the market that we do need to be concerned with, and those are the pockets that are now going to GoFundMe to pay for groceries. So that's sort of a macro environment. But what again, it's not all doom and gloom. What I'm trying to say is there are still pockets of the market that are going up. We still have precious metals that are going up. You still have like MP materials. This is insane growth. This is $19.82. It's up to $100. That those continue to go up. We still have energy and energy related to data centers, and data centers can continue to grow as far as revenue, as far as plans for future growth. So energy related to data centers continue to go up. I'm not going to go through all the different tickers because a lot of these are in the AI2 index. So that we'll talk about at MTC in Vegas, and John will continue to talk about in the AI2 service that he's running. But so just wanted to show that
I may just keep it the best kept secret on the internet. I mean,
what's that?
I'm the whole concept of AI2. I may just not disclose it anymore.
Right. Because you just got to follow where the money is going right now. And
pull up BBAI.
Yeah.
Big Bear.
Yep.
And I got to tell you, all of this stuff in the AI space, I feel like I'm at the zoo. We've got penguins and bears and
Lemonade.
In the coding process, I have Python and pandas. It's like, honestly, I feel like I live at the zoo now.
Yeah. But yeah, I mean, this is
big bear. Oh, wide bar. Is that zoom in on today?
well,
Was that
market.
yesterday? That was yesterday, right?
Yeah, this is yesterday. Yep.
All right. So yeah, we're right on that resistance line.
Yeah, I mean, right. If
highs on the wicks, very
if
strong.
if you're looking for support here, there you go.
Yep. we need to open higher. I want to see this thing break through 10.
Yeah, well, it's estimated to open up at about 928. So you're going to be opening up, you're going to be gapping up and opening somewhere around here.
The defining feature of yesterday in the market was the small cap rally versus the
Yep.
major indices. Um, so I, we were we were nicely positioned on the day yesterday with some of our small caps, and not nicely positioned on some of our large cap tech. So it was a weird day from that perspective, but I still think we're going to keep seeing things move higher. I'd like to see. IWM really fell off the shelf there. Did Oh, that's an hourly?
No, this is a 5 minute chart. So this is what John was talking about with yesterday. It gapped lower, but really it was the small caps that were leading the market, and part of that is because there's now Powell and others are saying yes, there's room
Rate
for
cuts.
more rate cuts.
Yep.
And so that really kind of led the small caps. But and I don't know, actually, I don't know if this is going to help me tell my story because I have not looked at this one. Um,
Wait, go back to that previous chart for 1 second.
yeah,
You-
but here's some of those mega cap, Meta, uh, not enjoying the same rally as IWM. Anyway, here's IWM. Here's a chart from yesterday.
So we have an inverted flag, right? Higher highs from the green candle up on the downside, higher lows, excuse me. Inside the red candlestick today, or is that yesterday?
This is
Or
all yesterday. This is
excuse me, the last 5 minutes of the day. So we had a little bit of a sell at the last 5 minutes.
Yeah, we had, this is a sell off from 1525. Was that 325 to the end of the day?
And I really hate that last hour of trading. If we could just lop that off, it would have looked better. But
But if you look at it, like we're set to open around 250, so we're going to
gap right
we're
back
we're
up.
set to open higher than yesterday's high, somewhere around here.
Good roll. I like it.
So yeah, that should be just a little.
I think
You'll see the
the one
moving
thing that
averages kind of
really
correct and start moving higher.
it took a couple of days for this to work through for me and my thinking, and that is that Wall Street is going to ignore the unless something gets really out of control. Wall Street's largely going to ignore the worst of the rhetoric between U.S. and China until November 1st. That was the first date um, where the additional 100% tariffs were supposed to go into effect. So I think I would expect Wall Street to stay more focused on earnings and the Fed in the next 2 weeks, and obviously the government shutdown, which at some point has to get resolved. And because if it doesn't, uh, that that weakness that you were talking about in the banks is going to get worse in the next quarter. The longer that shutdown goes on, you can't have uh, what is it, 1.4 million people not getting paid. That's money that doesn't flow back through the economy. So it's a real short sight on the part of both parties not to get the shutdown over with. Um, but at any rate, I think Wall Street continues to look past some of the worst rhetoric right now until we get closer to that November 1 date.
Yep. Well, so that was all I wanted to show for today. Midweek update is it's been it's been a cookie week. I mean, on SPX daily, if you look at this, I know there's lots of lines, but you know, big red bar on Friday, you know, Monday, Tuesday. So we're just kind of stuck. And if you look at a lot of things, if you're a momentum trader, you're saying, okay, momentum is slowing down. If you are, a value trader, there are some stocks that have been beaten pretty hard, but they're still not, the momentum isn't really picking up or whatever. So you just have a lot of these mixed signals. And since this is Breakfast Club, this is open to more people. I will say mixed signals are okay to sit on the sidelines, tighten up stops, just be a little bit more cautious, maybe reduce size or whatever as we figure out what's going on in the market. It does seem like um, momentum is picking back up, but yet, if you look at this, um, we weren't able to close higher than yesterday's high or than the previous, um, than Monday's close or even Monday's high. So like we're just kind of stuck. And when you're stuck, it's okay to just kind of take a pause. And again, there are very key segments that you can trade. There are very certain sectors that you can trade. And I'm not saying, yesterday in MTC we had two we put on two trades. One closed same day and the other one is up 30%. So you can still trade in this environment. You just got to be a little bit more cautious, I think.
Awesome. All right. Anything else that you have to share?
Nope, that's it. I'm
Okay,
done.
we'll keep it short today. We've got a lot to plan for next week. We have live trading at 11 a.m. For Millionaires Trading Club and Income Masters at 12:30. And again, a reminder that Breakfast Club will be dark next week as we are in Las Vegas for the Millionaires Trading Club event. And we will return the week following on October 27th, Monday at 8:30 a.m. Thanks for joining us today. Have a great week trading. Enjoy the rest of your week, and we will see you again very soon.